Welcome back. We have breaking news right now on Heinz. Right to Kate Kelly we go. She has the details. Kate.
Maria, some breaking news, as you mentioned, on the deal that made major headlines this week. The SEC, according to Reuters, has filed suit against, quote-unquote, certain unknown traders in H.J. Heinz & Company in relation to their call options. You may recall that call options in Heinz not terribly active on an average day, about 820 contracts per day in an average day in the past month. However, Monday and Tuesday's volume, while being weak, spiked Wednesday to about 3,400 contracts. This is before the deal was announced, though. News of the deal came out Valentine's Day morning. That was yesterday. And, of course, the stock spiked on that news, and those call options, depending on what the strike price was, may have been well into the money. But there was a massive upsurge in volume in that day before, and presumably the SEC, Maria, is trying to figure out who was behind that, and they have filed a suit of that nature.
All right, Kate, thank you so much. Kate Kelly, so just as the individual investor is coming off of the sidelines, could stories like this send them running for cover once again? What does the retail investor need to know? Joining me right now is Martiak of First Allied Securities and private wealth investor Derek Kinney. Good to see you guys. Thank you so much for joining us.
Thank you for having me.
So, Mark, let me
pleasure.
kick this off with you. What does this mean for the individual investor? I mean, how do you be sure? You hear stories like this, well, there could have been activity before the Warren Buffett acquisition. What's going on?
Interestingly that you ask, most of my clients this week asked me if I had any inclination or understanding of what happened. Clearly, when there's a spike in the call options trading, it makes you wonder what's going on. Most of the time, though, Maria, it's coincidental. However, the SEC may know something that most of us don't know, but I don't think it affects the individual trader, high net worth, ultra high net worth, or emerging affluent, core affluent segments of investors. I really don't think it has anything to do. Most of my clients, I don't want them to trade stocks like that, like day traders.
Right.
However, that universe of day traders exists out there. We all know it. We don't know what information they're acting on, and usually it's after the fact.
Well, I don't care if it's day traders, high frequency traders, long-term trading. The individual just wants to make sure that the playing field is level.
I agree.
Is it level?
It's not always level. However, I would not discourage any of my clients, nor do I feel any of the advisors.
What do you mean it's not always level?
Well, institutional investors have lots of money. High-frequency traders do volume trading.
What does that mean? They get in front of everybody else?
Sometimes they do, and sometimes they have information that the individual investors
well, how do they?
don't have.
That's right there is a big problem.
Yeah,
how do they have information that everybody else doesn't?
Who knows? No one knows.
Well, the SEC is obviously thinking they know.
The SEC understands that. They look at these types of activities and red flags go up. As an individual advisor with my team and my clients, we always have to be compliant.
Right.
So we look at, when there's an investor that comes to me and wants to do some call options and it's not in their investor profile, their risk tolerance, the way they normally trade, I question that. Yeah. I can't allow that to happen.
Derek, jump in here. What's your take on this? I mean, as an investor, how do you deal with this kind of stuff?
Well, Maria, one of the keys here is not to throw the baby out with the bathwater. When you think about these investors, and I'm on the local level here in Dallas as I talk to people, the first thing is it's a buyer beware mentality. People are losing confidence and having distrust when they hear companies doing these types of things. They feel like a privileged few have information they don't have, but the rest of the people get punished because they don't have access to that same data. The key here is to look for companies that have trust and confidence and things that have a good track record. Make sure that because one company has a blemish, not every other company has those same issues. You want to look at your risk tolerance, your situation for retirement, your goals, and make sure these investments are appropriate for your situation. The bottom line is don't panic and don't have a knee-jerk reaction when you see news like this.
Well, when you see news like a big deal, how do you deal with it? Do you wait for the dust to settle? You want to wait till the information is out there before making a move and digest it or not?
Maria, I think the question is asking people, what does this news mean to me in my personal financial situation? Just because it's a breaking news item for the world doesn't mean it's necessarily good for their personal economy. The key is to look at, are there some flaws possibly in my own portfolio as an investor, and do I need to make some changes based on my overall situation, not just a news item today? The key, though, is look for things where there's trust, there's confidence. The bottom line is when news of this comes out, it does erode the put trust in the integrity of the entire stock market. The bottom line investor has no safety net. The pressure is on them to make the best possible decisions.
Yeah.
They can't mess it up, but the pressure's on them. If they do, they may be out of their retirement.
Look, this is just the basics, right? I mean, I understand
That's right.
that. Derek, let's talk about the NASDAQ pre-market as an example. And I want Derek and Mark, I want to get both of your takes on this. You say this is all the more reason for clear entry and exit price strategies. Derek, you said that in terms of the NASDAQ. What do you mean?
Well, think about this. If the NASDAQ's open a few more hours, there's going to be some opportunities there. The bottom line is it's almost becoming like a convenience store. If you want gas or groceries, go to the convenience store. Now you can buy a stock or bond 24/7 is the trend, it appears. The key is that investors, just because the market's open doesn't mean you have to be buying. Right. This isn't Black Friday where everything at the store is on sale. You want to make sure that the stocks you want to buy are the best for you.
Does that give one portion of the market an advantage because they're in the NASDAQ when it's a pre-market?
I don't believe so,
No, okay.
Maria. Just because they're up at 4 in the morning versus 7 in the morning, the volumes in the pre-market trading are very, very light. There's not a lot of heavy volume trading at that time. So I don't really think it affects
that light volume situation.
Well, occasionally you do. That's right. But again, if Derek made a good point earlier, Maria, if advisors and clients are working together, they are not focused on this myopic individual trading where it's one stock, it's headline risk, and there's a knee-jerk reaction to it. You have to look, advisors have to look, and clients have to listen carefully to their advisors. You look at the holistic picture. You look at asset allocation. I dictate to my clients, or at least share with them all the time, don't chase the green arrows. And you alluded to it too, let the dust settle a little bit and see where the news takes us.
We'll leave it there. Mark, Derek, good to have you on the program. Thanks so much.
Thank you, Maria.
We'll see you soon. As we
My
just
pleasure.
mentioned,
Thank you.
the NASDAQ